It's interesting how certain individuals have this unique approach to investing that sets them apart from the crowd. I mean, imagine having such patience, discipline, and a profound understanding of business that it turns you into a living legend in the investment world. Hello, and what's up, everyone? Today, I'm super excited about this video because we're diving into the multi-million-dollar approach of none other than the legendary Warren Buffett to dividend investing. So get ready to absorb all the amazing insights he has to offer. Turning investments into gold. You see, Warren Buffett's approach to dividend investing is a lot like a treasure map of financial wisdom, and it's an adventure we all want to embark on. I mean, just look at his unparalleled success and longevity in the investing world. It's mind-blowing. No wonder his strategies are like gold mines for investors of all levels, from newbies taking their first steps in the investment world to seasoned pros in search of fresh perspectives. However, the pleasure of dividend investing itself is timeless. Usually, it has the promise of a steady income, and the potential for capital appreciation can be ignored. But when you add in Buffett's principles and insights, it's like giving it an extra layer of reliability and assurance. It's clear that if you follow in the footsteps of a master like Warren Buffett, it's like having a guiding light showing the way. You gain that much-needed confidence, knowing you're on the right track. I mean, seriously, who needs more guidance when you've got the path laid out by someone as brilliant as him? The pillars of success. Now, if we talk about the main agenda of Warren Buffett's investment philosophy, there are two critical pillars that are the backbone of his approach: intrinsic value and margin of safety. Let me break it down for you in simple terms. So, intrinsic value is like the true worth of a company, considering all the tangible and intangible factors that make it tick. From its assets and earnings to its brand value, it's the heart and soul of a company that can sometimes drive stock prices all over the place. On the other hand, we've got the margin of safety, which is like a protective trench around your investment castle. It's the discount you get when you buy a stock compared to its intrinsic value. Now, here's why dividends come into play. According to Buffett, dividends are a tangible representation of a company's intrinsic value and its ability to generate cash. If a company pays steady or growing dividends, it is often suggesting a strong intrinsic value. So when you look at the grand tapestry of investing, it's like all these principles are woven together. It's a pattern that stands out, emphasizing patience, discipline, and a deep understanding of businesses. And it's this very pattern that often leads him to those dividend-paying companies that have stood the test of time. Buffett's recipe for financial success. In the world of stocks, Warren Buffett is like a seasoned gourmet chef who knows the value of quality. And when it comes to dividends, his taste buds are always looking for something special. He wants companies that serve up consistent dividend payouts and have a knack for growing those dividends over time. You see, for Buffett, these are the real gems in the Buffett of stocks. They're the ones that pass his taste test with flying colors. Thanks to their reliable business model and their commitment to sharing profits with shareholders, undoubtedly, they're like the ultimate comfort food in the financial world. Let's talk about Warren Buffett's investment portfolio. There are a few key dividend stocks that he simply loves. These stocks have proven to be like comfort food for his long-term investing approach. One of his favorite picks is Coca-Cola, the iconic beverage giant. For Buffett, Coca-Cola represents the perfect blend of a rock-solid brand and a resilient business model. But what truly makes it a winner is its consistent growth in dividend stocks over the years. Buffett's first taste of Coca-Cola was in 1988, and he's been holding on to it ever since, relishing the steady stream of dividend income it brings to the table. Another surprising addition to Buffett's portfolio is Apple. Known for avoiding tech stocks due to their complex business models, Buffett surprised everyone when Berkshire Hathaway bought a stake in Apple in 2016. What caught his eye was Apple's strong brand, loyal customer base, and the massive cash flow generated by its business. To top it all off, Apple began offering consistent dividend growth and even initiated a substantial share buyback program, making it a standout performer in Buffett's dividend strategy. A long-standing favorite in Buffett's investment tale is American Express. His journey with the financial services company dates back to the 1960s when a scandal rocked the firm. While most investors turned away, Buffett saw through the short-term turbulence and recognized American Express's long-term value and solid business model. His faith was rewarded handsomely as American Express consistently paid dividends and demonstrated impressive growth, becoming a beacon of success in Buffett's dividend investing journey. In the grand performance of Buffett's investment theater, these companies, Coca-Cola, Apple, and American Express, have played their roles to perfection. These dividend stocks are the stars of Buffett's portfolio, and they exemplify the principles of patience, discipline, and a deep understanding of business that have led him to financial success. Cheers to the power of dividend investing. The value of patience. Here, it is not wrong to say that patience is like a secret weapon in Warren Buffett's investing playbook. And guess what? He knows how to use it. He's always saying the stock market is a device for transferring money from the impatient to the patient. And guys, his investment history proves that point, right? Buffett's approach to dividend investing is a masterpiece of patience. When he buys stocks, he plans to hold on to them forever. That's right, forever. He's all about giving compounding the time it needs to work its magic, and that's where dividends come into play. In his eyes, they're his loyal companions for patient investors, constantly showering them with cash no matter how moody the market gets. From his beloved Coca-Cola to his trusted American Express, Buffett's investments speak volumes about his patience. He waits for just the right price to make his move, and then he holds on tight, even during market downturns. And in return, the rewards come rolling in, thanks to those steadily growing dividends. A guide to dividend investing. Warren Buffett's dividend investing strategy is like hunting for precious diamonds in a coal mine. He's got this incredible ability to spot real value and find those hidden gems that turn out to be some of the most rewarding investments in history. And guess what? We can learn from his playbook and apply some of his tips to identify strong dividend companies ourselves. Let's dive in. First, keep an eye out for companies with a consistent track record of paying dividends. These companies are like clockwork and are always rewarding their shareholders year after year, come rain or shine. And you know what? That kind of consistency often signals a strong, resilient business. That's exactly what Buffett looks for. Next, focus on companies with that oh-so-important sustainable competitive advantage, also known as a moat. According to Buffett, it's not just about how much industries will grow or affect society, it's all about figuring out the competitive advantage of a particular company and, above all, the durability of that advantage. That's the key to finding these long-standing and long-lasting profitable investments. And here's a tip that should be in every investor's pocket. Understand the company's business model. You should be able to explain how the company makes money in simple terms. If you can't, well, you might be in and over your head. Buffett's always insistent on investing in companies that operate within his circle of competence. It's like knowing what you're getting into and making sure it aligns with your expertise. So, there you have it. Guys, these are some pieces of instructions that we can implement from the legendary Warren Buffett's playbook. Let's use these tips to make smart choices and build a strong dividend portfolio. Happy investing! Alright guys, that's all for today. Don't forget to like and subscribe to our channel. See you in the next video. Until then, goodbye.